Mark from Blunhouse Technical Analysis, and we are back with another session of Chart the Markets. And you can tell that we were having a conversation before we went on air about some of the things that we're going to look at today, which include things like BTC, XRP, ETH, BNB. We're going to look at US oil. We're going to look at United Healthcare. And we're going to spend a little bit of time looking at some of the coins that are ISO compliant. So those are things like, again, XRP, XLM, XDC, IATA, HBAR, and any others that you want us to take a look at. We can do that today. Before we start, I do want to thank our friends at FEG Token and smartdefi.com. If you have not looked at smartdefi.com, run over there and take a quick look, and you'll learn how to create your own token in the matter of seconds. And they've got it all figured out for you. And it's tokenizing real world assets. You can do it all there. And it's a very, very, very slick platform and its own exchange. I also want to thank our friends at BYDFi exchange, BYDFi. They are gracious every week to provide us with trading bonuses to those who have signed up with our link. So if you get a chance to do that, you'll notice it in our X post. All the details are there. Just click on the link, sign up, and you're good to go. And every week, or every draw, rather, every stream we do, we're going to have 2 draws. So without any further ado, let's get to the markets, because this is a little bit of volatility that we've seen over the last little while. Now, not so much in Bitcoin, what you're looking at here, and I'm going to start with Bitcoin today, because I think this consolidation is really important, right? We look at these charts twice a week. And when you do that, you have an appreciation for how long time actually feels before a move happens. And, we don't like to trade chop. And if you're trading this daily, that's what this is, chop. Now, it doesn't mean there aren't trades on shorter time frames. Obviously, there are. But from a macro point of view, when we look at this daily, this is a lot of consolidation here. And we know that coming out of this, chances are the move that we get will have some sort of velocity to it. What we don't know is, without too much certainty, is where's it going to go, right? That's what we always want to find out. So what we're going to do, we're going to go in our script and we're just going to light up the 20-day moving average, the 50-day moving average, and the 200. And then we're going to start to drop our time frames. And this is a chart that we've been looking at for weeks and weeks. This is the line that we dropped in here on the 27th of May because we wanted to see if this created a level, which it clearly did. And then a few weeks ago, we did the same thing up here. And it's not an accident that these 2 ranges kind of box out a gap, which is something that we have to pay attention to. It's a volume gap. It tells us where price has and has not been. That's where it has not been. And if it pulls back to that area, it can head through there pretty quick. But we're trying to figure out what's going to happen next. So we had a sell signal yesterday. Now we have a buy signal. And that's quite common when price is consolidating, because it gives your short-term averages an opportunity to come together and start to twist, and because there's no real change in price, right, to speak of. What we have done, however, is we did fail the 20-day moving average, at least on the daily, although it has bounced back and it's trying to retake it today. So we have 3 choices, don't we? Up, down, and sideways. This is the example of sideways. Nobody wants to talk about it as an option because it's not a lot of fun, but here it is, even on our daily chart. What do we really want are the moves up and down, the big ones. So let's start to shorten the time frames to see if we can see something that we couldn't necessarily see on the daily chart. And what might that be? Well, here's the 50-day moving average. And we've had a continuation. Now, this is the 12-hour chart, and some people would argue, well, it might be the true daily for Bitcoin and crypto because it trades 24/7. We're just going to look at it as just another time frame to look inside. But what you start to notice is your 20 and your T-line and 5 EMA have all started to twist together. And it seems like maybe they're waiting for the 50. But something will happen in and around here. The more of these that start to come together and twist together, the more elastic a move you get up and down. And as all we can do is just to continue to drop our time frames to see if there's anything that can give us a clue on what might happen next, right? And honestly, we're not getting a lot of clues, right? This is a real good example. We know what this is. This is the point of control on the volume profile, and the point of control is what averages all of that past price and volume. And it's pretty clear to see that nobody wants to take it too far up and nobody wants to take it too far down, right? And the 4-hour chart, which I think for Bitcoin is always a really, really, really nice chart, is showing us that it's respecting the ranges of the upper value up here and the lower value range down here. Like there's been a ton of respect, and price just gravitates to the point of control, telling us that nobody's quite sure what to do next. This is literally just minds coming together, trying to figure out where price is going to go. The buyers and sellers got to figure it out. When we switch to the 4-hour, what do we notice? Not only do we have the 20 twisting all through all these averages, now we have the 50. And if we go back again to, again, a shorter time frame, what do we have? We have the 200 in there as well. Now, the 200 MA, for those of you that are newer and newish, is kind of your basic bull bear indicator. You know, when you're trading meaningfully above it on any time frame, you're more bullish, and below it, more bearish. So the battle for control right now seems to be happening on the 1 hour. Right? Which one of these is going to be the one that breaks up or down? All of these major moving averages in here are creating resistance. But if you break through, like notice that we don't have a confirmed buy signal yet, right? But if we break through, what are you going to try and look for to the upside? You're going to look for previous waves highs. So this 1 hour chart will kind of give us an example of some, shorter term targets. I guess we have to look up here at 18,685-ish. And then you just continue to look to the left to look for that other high, which you find here. Now, what do you notice about this level? It's somewhat structural, right? You got a wick at that level, and you have the bases of these candles up here trapped by it, and here you have the tops and bottoms of some to the left as well. So it's somewhat structural. So when you get past here, that'll be key. At least it would be for me, because it is that kind of structural level that you want to break through. And as all we're looking at is the ebb and flow of the market. And you can be bullish and bearish the same asset at the same time. You can be trading it on a shorter time frame and be bullish, and on a much longer time frame and still be bearish. Those things are all possible. If we look at the weekly, we really get a feeling that you're kind of getting into that uncharted territory. So on this weekly chart, you see those basically 4 tops. What's that telling you? It's telling you the market just hasn't quite figured out yet where it wants to take it. That's all. If we were getting support at the bottoms of candles, we'd be saying, hey, it looks like the market wants to hold this up a little bit. But right now, it's, nobody wants to be the one to walk across the gym floor and ask somebody to dance. They got to think this one out. Is it still a bullish chart? Yep, it is. On this weekly chart, even, it's still bullish. And why is that? We note the divergence between the T-line and the 5 EMA. That divergence is telling you there's enough momentum and buy pressure to keep the divergence in place. When it shrinks, narrows, or turns the other way, it means that the buyers have turned into sellers. Simple as that. But as long as we have that divergence, we can feel comfortable that we're still in an uptrend. Are we bullish? Yes, because we're trading also above the 20, the 50, and the 200. But you have to remind yourself, don't get caught up in the bullish move. You have to look over your shoulder so that you don't get hit by something you didn't see coming. Don't get caught up in the exuberance. So when you're trading on any time frame above 20 and 50 and 200, remember that you're vulnerable to a pullback. And the 20 MA right now is really in a nice spot with some past price. Like you could see if it was to roll over and come back and test, because we know that when we break one level, so if we get a confirmed trend change, and then we start to look for the next level, it's the 20. Right? And have we had a touch of the 20 on the weekly yet? No, we have not. So we're due for one, but we also know that those first touches typically get support. Maybe for a day, maybe for a while, but they typically get support. So you haven't even had an opportunity to have a continuation off the 20 MA yet. So, you know how we talk about how the horse doesn't like to get too far away from the barn, right? Well, the barn can be considered the 20-day moving average, right? This is the daily chart. Remember, everything is fractal. So what we can demonstrate on the daily, we can demonstrate on a 5-minute or a weekly. Here's your confirmed buy signal. There's the convergence, right? Again, haven't even had an opportunity. You test it once actually and you fail. You get support from the 50 in this case. And there's our resistance again. Here are the candles that matter, right? The ones that are bouncing off support. At no time when you got your buy signal down here, even on this pullback, did you break, right? You didn't. You just kept going up. And that's still the case up here up until yesterday, believe it or not. There was enough, even though it was volatile, there was enough price momentum up to keep the shorter EMA above the slightly longer EMA. And that's what's helping us determine what the trend is doing. But we have to understand that, you know, on the weekly chart, you can see this is your top for now. Right? If we were to draw fibs, because we believe in fibs, or at least I do, fibs, fractals, and filters. So if we were to drop fibs on this weekly chart, just as an example, we take the swing low and let's connect the swing high. And the first thing we instinctively do is we look for 618 as a retrace. Or at least I do. And that's it right in here, and it looks like it's 93, 123 on the weekly. The first thing that would have to happen, if this is our top, we have to break this level and start to retrace. The 5 comes down through the T line. Everything else starts to unfold, and we start looking for the 20. Right? This is suggesting that the 50, because time and price will play a factor here, right? This is a weekly chart, so it has to unfold. However, could the 50 end up somewhere at 618? Yeah, sure it could. Absolutely. And that just helps give us another area to target. So I'd be looking for the 50 and 618 as a target. And of course the 20. And it's just a matter of peeling the onion back to see which direction price is showing momentum in. And there's other ways that we can pick that up. So if we look at Bitcoin's stochastic RSI, right, and there is a difference between just a regular RSI, stochastic RSI. I like the stochastic RSI. It's overbought, right? We like to trade, or we want to short or exit trades when they're running and exhausted. And usually these levels, the overbought levels, are a sign of that exhaustion. And when the stochastic RSI rolls over, it also shows you that kind of divergence, right? But we want to make those decisions up here and down here on this thing, right? But we don't trade every little tiny cross, right? We're just looking for confirmations of breakdowns. And then we have to use our other analysis to see if they're confirmed or not. Now, Fisher transform is the other thing that we use. Oddly, it's actually a little choppy right now, although it's hooking over and giving us a downward look, which so is our stochastic RSI. The one that usually gives us the last signal is the MACD, because there's always an element of lag, right? The MACD just tends to lag a little bit more when you have a moving average in signal line above 0, which is this level. More bullish things can happen than when it's down here where more bearish things can happen. And you can see, you can have up and down price movements that are reflected, as you can see here, without breaking 0. Right? When you break 0, yeah, it's kind of changes your sentiment to bullish. Right? But it is a little bit overbought. But this process of being overbought can last for a long time. You might see the stochastic RSI just continue to stay overbought like this without really rolling over and breaking the 50% level. What does that tell us? Well, it tells us the buyers haven't left the building, basically. When your stochastic RSI stays above this level for long periods of time, this is a weekly chart, so this is a long period. It's just telling us that the buyers are not leaving. And we can check this on any time frame. So our Bitcoin weekly chart is still bullish. It's showing us that it's got to make a decision to break through that particular level if it wants to go on and make new highs. But this is the ebb and flow of the market, right? Why is this important? Well, it's important because if you're a long-term investor and you've been saving your money for a long period of time and you're about to unleash it into the market, let's make sure that you're not buying up here without any context, right? Give you another example. Actually, I'm going to save that for another example later on. Anyways, we know what's going on here, and we just have to wait to play it out. Don't trade the chop, trade the breakouts and the breakdowns. Roll the time frames back so you don't get hit by something you didn't see coming, and to give yourself some insight into a trade a little bit early. Remember that you don't know what each candle brings after the current candle. We don't know. But if you look at this chart, here's your entry signal. I love these two equal bottoms. That would be a cue for me. Your 5 EMA goes from red to white, telling you that money's coming into the asset. Boom, you get your buy signal. This one jumps through the 50 and through the 20 and holds, even on the little pullback, not only the 20, but it also holds the T-line and the 5 EMA. That's bullish, right? That's why when we look at the daily and it looks like it's going sideways and we're trying to figure out what might happen next, that we dial our time frames back. Right? This still looks bullish. And instead of grabbing this candle, you would have been in somewhere down here, right? In one of these two candles. And what does that do for you as a trader? It puts you in the driver's seat earlier. So in the event of those unexpected pullbacks and volatility, you've already made money down here. It makes the decision on a disaster candle a little easier to take because you're ahead of the game. And that's what we want to do. We want to get you in at the right time and get you out at the right time. That's it. So remember, let's watch and see what happens as we break these major moving averages to see if we start looking at previous waves highs. All right, this is the 4 hour. You can do this on the 15-minute, the 5-minute, the weekly. It's all the same. Now, let's take a look at ETH, because I don't think ETH gets enough attention sometimes. We're all too busy talking about Bitcoin. And, for those that are paying attention, I think that's a move that you'd want to catch. Like, the point of running the script is not to argue with it. right? And sometimes I even catch myself doing that, and shame on me because I'm the stupid guy that wrote it, right? So what am I doing? And I have to remind myself that I wrote it so I don't think as much, right? I know what works. I know it's effective. I know it's safe. I know it mitigates risk. Now, how do I put it into something that I can chart, right? In its simplest form, if we're not running anything on this chart other than our, actually, I'll just leave it for now. Other than the T line, the 5 EMA, you get a buy signal. This is what you're looking at, okay? It's a daily chart. That's the candle close, and that's what you get. You can see the impulse down and the snap back higher. The market hasn't confirmed this move yet until here, at least not on the daily. But as soon as you see that type of divergence between those two levels, you can start thinking about an entry. But on this daily, and this is why I ask you to not to follow too many things at the same time. I probably only trade 5 crypto assets, max. Not all at once, by the way, but I chart them all the time. And I trade one of them regularly and the other 2 semi-frequently. But I chart them all the time. And I think I know them pretty well. And what that helps you with is that it helps you be at the right place at the right time because you're paying attention. So in addition to trading a smaller amount or charting a smaller amount of assets, the next thing you're going to do is start to set alerts, right? To help ring your bell even more. Like use the platforms that you're using to help keep you in the right place at the right time. So if you're watching Bitcoin or you're watching ETH and a couple other things on the daily chart and shorter time frames, you're going to catch this. Right? And you're going to catch it before everyone else is really paying attention. This is a great example of getting an early signal when no one else is really thinking anything is going on and price just goes up, 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 and up. We have no idea what comes after each and every candle, but the chart does tell us what the trend is, at least for now. Through all of this, even these red candles, what are these red candles? These red candles are just red candles in a downtrend or in an uptrend. That's it. Right? That's all it is. The trend matters. Regardless of the time frame, could be a 5-minute chart. If this was a 5-minute chart, this would be a great entry just the same, and you would manage the trade just the same. It would just happen faster. And at no time does our methodology suggest that you would have exited this trade on the daily time frame. This is why I like the daily for a lot of new traders in the 4-hour and longer time frames in general. So you don't have to worry about all the intraday stuff as much. Just focus on a reasonable time frame that's not going to make you manic, and just get the ebb and flow. Buy signal, I take it. I note the divergence because I can see it with my own 2 eyes, and I'm okay. And you stay in the trade. And sometimes, do you get a sell signal and it might, suggest you exit? Yep. And it's up to you to determine whether or not you want to exit there, or maybe there's other things on the chart that are telling you, hey, you know what? I think I'm going to be okay. I'm going to stick around for a bit. What gives you the opportunity to have that luxury? Because you were in back here. That's what gives you that opportunity to have that luxury, right? If you wanted to make it even more efficient, you would probably enter off the 4-hour, right? Way back here. I love all of this. See this? The 20, the 50, and the 200 twisting together. This is what I want you to pay attention to, folks. This is why. Now, even if you're not running the script, you're going to catch a reasonable entry, right? You would have entered here and you may have exited up here. Could have entered here and exited again. And when you entered this one, did you have any idea that you were entering a parabolic move higher? You had no clue, right? Is all you know is that, hey, I'm trading tight with the 20, the 50, and the 200, and I get a green candle on the north side of the 20, on the north side of the 50, and the north side of the 200 on a 4-hour chart. Yes, you take the trade. And boom, price goes up. And by this point, you're not stressed, right? Because you're in on the 4-hour at a good spot. Whether you're leveraged or not, doesn't matter. You're in on the 4-hour in a great spot, which probably would have been somewhere in this neighborhood in here. And you're in the driver's seat, right? The purpose of this is to make it easier for you, not harder for you, right? And everything we see repeats on every asset, all the behaviors. Right? This is a beautiful ETH chart, and I'm nice to see it get its a big leg higher, because what was it doing here? It was boring the pants off of you, bumping its head along the upper value range, which is tucked under that yellow level that you see there, the point of control, grinding sideways, up, down, and sideways. Here's your sideways. Pretty clear to see what that was. Those are the three options you have. We just want to put you in the right place at the right time. Now, what can we tell from the weekly chart? Well, we're getting a little hot, right? We don't like to see this kind of gappy space between the short-term 5 EMA on the weekly or any time frame, because what it means is that price will want to come back and kind of stick to it. Notice how price rides up and down those levels with some consistency. It doesn't like to be too far away from those areas, and when you see it too far away, it can mean that price will pull back faster than time can catch up. and that's how these pullbacks happen. And what would happen? It would just come back to the 5 EMA as a test, and or the T line, right? If we're in a bull move, we just want to make sure that price continues to trade on the north side of those things. As soon as it starts trading on the south side, well, you know what's going on. So as far as ETH is concerned, you can see the attempt here is to take out these previous highs. That's what we're looking to do. And it doesn't happen in one candle, as you understand. It could still be a candle or two before this thing figures itself out. What's the upside opportunity? You take out these highs, and then you start looking to the left to see what's up there. If it fails, opposite is true. You're looking to see where the support is, both from your major moving averages and structure. And you understand that when you break one level, you'll find the next. And if you break this level, you'll find the next, and so on and so on. And the takeaway that I want to be, especially, if you're a long-term holder, don't be too panicked when these big pullbacks occur. It's not the end of the world. It is just merely a technical response. Current price looks for past. And when you go parabolic and on the way back, past price seems real far away, well, that means it's going to be a long trip. But it's just coming back to a respectable level technically. Like I said, it doesn't like to be away from the barn. It'll come back and test these levels, right? When you're trading on the north side, here's a continuation off the 20 MA. But you have to understand that when you're trading above them all the time, like you are here, at some point, you're going to come back and test it. This would have been a nice short. Even if you took it at 3,800 and you exited somewhere around here, 2,900, that's a nice short. What happens at the 20? You get a continuation. Except on the retest, you fail. So you basically got a week's worth of support from the 20 before you failed. And you can see how relevant the 50 is again on the retrace. So it wants to test, it wants to take the highs, but if it fades, at least you know where it's going, and it's not a surprise to you. And that's what causes panic in the market, right? That's what causes the panic. When everyone looks around and goes, oh no, where is price going to go? Now, let's go to XRP, because the ISO compliant coins are really getting some love. And I was on a stream with our friend Rico Moneybags yesterday, and we did speak about these things briefly, but I think it's worth another look, because I really have to applaud the holders who forever and ever and ever stuck around, accumulated through what must have been one of the most painful accumulation phases, that we can document. This is painful, right? This is kind of years, and it went on for years. But those people, and those are true investors, right? Those are the people that went, I believe in this. I think it has a future. How do I monetize it? And their answer was at that point just to accumulate as much as they could. Well, from a technical perspective, we know what happens when you have that kind of accumulation. Eventually, once the spring unloads, once the elastic lets go, it's usually a parabolic move. Right? And you can see in here, you've got the 20, the 50, the 200, even your EMAs just kind of hanging around, twisting together, just waiting for the day that they let go. And this is what happens when you do. Right? So these guys really deserve credit for sticking around and believing in something, right? And this is an example of what the payday looks like. It took a while. They knew that going in, but credit to them, they stuck with it. And on the daily chart, it's pretty clear, right? You guys got ideal entries, and then boom, price goes parabolic. Test to the 20 with a wick, you get a bit of a continuation. The next test, first test, you bounce, you do, the second ones fail. It's just probabilities, right? Again, you come back to the 20, get some love. But look at the 50-day. This is why you don't want to fail the 50-day moving average, right? It's kind of providing you with a lot of support here along with the 20. But when you break, this is what happens when you trade above, right? You had to come back, you go flat, you came back and tested the 20 and you fail. All right, no big deal, right? You can see the divergence to the downside. Pretty easy to see. You start to see the wicks at the bottom that come where? Right along the lower value area on the volume profile. If you're not using a volume profile, you should be, because it'll be super, super helpful to you, no matter what methodology you use to trade. I guarantee you'll find it useful. And it's included in the script that we use. Right. Here you get a test and you fail again of the 50, fail the 20. These are nightmare candles that are just there that are going to wash you out, stop you out, whatever the case may be. But what can we take away from these candles? Right? Like if you wanted to short, there's your equal tops. I love those equal tops. And that would have been a nice candle to short, even for a temporary trade. You'd be giddy if you saw that on a 5-minute chart. Fail the 50. Fail the 50. But what's happening? You are holding the 200, right? Fail it here, and then you can see all this stuff now becomes your resistance. Basic bull bear indicator, right? As long as you can hold the 200, that's bullish, but when you lose it, you're bearish. And it takes a while to break these levels, but when you do, you're off to the races again. And how do you look to see how much noise is on the chart? In this case, you're going to look ahead, and you're going to go to a weekly to see what the weekly can tell you. And you can see on the weekly, the 20 was really relevant here, and breaking it was a big deal. There's the first attempt that fails, and here's the second attempt that goes through. Right? The probability of these first attempts failing is much higher. Much, much, much higher. It's the second ones and third ones and so on that are more likely to go through and break out. And do you get a clear buy signal on a weekly chart? You sure do. Did you have opportunity to enter it on the weekly with some confirmation early? You sure did. And that's what the script does for us. It gives us that opportunity. And I wanted to show you this weekly chart only because I don't want anyone to think that when price pulls back, and it will eventually, that it's going to be the end of the world. And when it does start to pull back, look at a chart similar to this on any time frame where you have a 20 and a 50-day and a 20-day, and you'll start to know where price may go. Look for the structural levels, look for those major moving averages, understand that time and price will come together. And like here, for example, on the daily chart, this is a key level here. So I'm just trying to line up tops and bottoms because that validates a support and resistance level for me. And lo and behold, does it not sit on the shelf of a volume gap? Yeah. So when price pulls back on the daily to this area, don't be surprised, right? Just be glad you didn't buy up here with your hard-earned dollars, because until price bounces and takes out that high, you have dead money on your hands, and that's what you don't want. So, you know, for long-term investors, buying in the right places is really key. Really key. And again, what we talk about, what you learn, will never be taken away from you. It just won't. Right? You'll notice that on a lot of, on a lot of these coins, let's look at XDC. So there's some major players in that space. There's XRP, there's XLM, there's XDC, there's HBAR, IATA. Who am I forgetting? Cardano, Algorand. Think of any else? I think there's a few others. But right now, as long as there's talk of traditional finance engaging this type of technology, they're going to get eyeballs. So this is just another example. This is XDC. I want to show you how this works on any chart. Look at the buy signal you get, right? Again, we don't know what comes after each and every candle. What would happen on this one? You'd either get stopped out or you'd exit on your own. The next day, lo and behold, you get a signal. If you take it, which I would suggest you do, what's going to happen here? Up, down, or sideways? Right. Well, we would expect some resistance on that buy signal that also came at a major moving average, which is important, that you would get a little bit of resistance. You don't. So when that doesn't happen, is your takeaway that it's a little more bullish than normal? Yes. Did that red candle, how many traders said on this daily chart, you know what? I've got like 6 green candles. I'm going to take my money and run. I'm going to be happy with that trade. Lots of them. And there's nothing wrong with that. But what I'm showing is the opportunity for you to have an edge over everybody else by demonstrating how you can stay in a trade and manage that trade. Once you master this, you're going to be invincible. And I think our friend Rico Moneybags is actually a really good testament to that. Like, that guy's dialed in and he's got his head wrapped around this like nobody's business, right? Confluence is important. If you're on a shorter time frame and you want to and you hope to catch a runner, let's say you're on a 15-minute chart, and that's going to sound long to some of you, I know, but let's say you're on a 15-minute chart. And you start to see, it starts to look bullish. Maybe you see something like this on your 15-minute, right? Well, that's exciting. You want to take that trade. And you get a few green candles, and then what are you going to do? You want to switch to your 1 hour. And lo and behold, your 1 hour might look like your 15-minute did a few candles ago. What's that telling you? You're starting to get confluence, right? And it's that confluence that's going to help guide you through the trade. But ultimately, if you enter off this daily, you're going to want to make sure that you pay attention to it the most. But the chart will tell you when you're safe, right? Here's a pullback of 4 daily candles that didn't have enough momentum to bring the 5 down through the T line and start to give us official sell signals. It didn't do that. Our 5 EMA sensed the fade early, sure, but it stayed bullish. This is where everybody gets faked out. Used to be one of my greatest frustrations, the fake outs. And I make no bones about it. But now I don't worry about that as much. I trust the chart, right? This big pullback, what am I anticipating? Support from the 20. Didn't even quite get there, but you got your bounce. Quite often, when you see, and this is a great example, so pro tip of the day, when you see a move like this that has not tested the 20, be very careful of that first touch or support level, because quite often you get that bounce that will create the double top scenario for you like this did. So what the matter is, hey, 2 equal points in price. The people that didn't sell here, now we're back here are thinking that maybe I should sell. Some of them did. You can tell. You can see what the money did. But it's held, so it's still bullish. And it's going to do what? It wants to take out the previous wave's high, right? As long as it's holding this, that's what it's looking to do. And, if it does take out this level, start to look to the left to see other areas that might make sense. Right? So this one is literally lined up pretty tight. Right? I'm just taking the tops of those candles way back here, hits this wick through here, and then hits this one in here. So we break this level, it's going to want to take the run for the point of control, upper value range, which is also these highs. It's just one level at a time, using what we know on how price moves to determine whether or not the direction is still the same, the trend is still the same. Right? Weekly IOTA, XTC, boom, beautiful chart, right? Impulse down, a little bit of a bottoming effect on the weekly, like literally 2 weeks. 5 EMA goes white, so there's money coming in. Then the sell signal or the buy signal shows up, and price is bullish on this chart. Look at it's holding the 5 EMA, right? Wicked through the T line, closed at the 5 EMA. You could be running again your weekly chart. A 5-minute chart does not matter.
That's bullish. God damn.
Right? I know, eh? I know. And the other one that, like, I know people that were in this thing like way back here. Like when it was 2-3 cents. This is a really I think this is going to be a cool story to see where XDC goes. I think it's going to be the case for a lot of these coins.
Yeah, one of them EMAs curling underneath like that on the weekly. Jesus, that's vicious, bro. That's, whew.
I know.
I haven't seen a chart like that in some time, man. Wow.
And here's another. I think Cardano kind of qualifies as an ISO compliant coin as well. And what do you notice? Same kind of bottoming effect, and then you go parabolic. So this frustrates you like crazy, but this is the home run that you're waiting for. And we hear about these all the time. Oh, I bought such and such, or my friend bought such and such at X. And you always hear about it after it's gone parabolic. Right? You hear about it, oh, my friend bought it down here, and this is when you hear about it. The point is that everyone here has the same opportunity to grab these. They don't all do this. All right, you can't have that expectation. But what you want is the ability to be at the right place at the right time, right? And when you're coming out of consolidation that we like here, or like we looked at on XRP, you just have to know that it's going to be a big move. It's just don't know how long it's going to take. There's no real way to tell, right? A lot of that's going to be driven by what's going on in the markets and regulatory things. That's what's driving a lot of this, but the levels don't change, right? Big parabolic move up, what happens? It retraces, right? Level by level, it retraces. It might not be fair to draw fibs on this thing because it's just a monster move, but where's 618? Right here. Let me back this up. Basically at 70 cents. 70.46, let's say. So did you come back and retest to 618? Yep, you did. Didn't happen all at once, mind you, but yeah, you did. If we look at a weekly, it's still going to be the same reads. The volatility in crypto you can't deny, but you also can't deny how technically clean it does move. It hits the levels, the technical levels that you would expect it to hit. It might get there in an unorthodox way, but it gets there. And I think we've all been around this space long enough to know what I mean by that, right? Like you can think the world's ending one day and then a week later, your dreams come true. It's insane. But you can see what's going on. Look how price respects the upper value range and lower value range of the volume profile. So why I like the volume profile is because it clearly identifies trading ranges for me on any time frame. And then when you roll in or overlay a T-line, the 5 EMA, 20, 50, and 200, well, you start to have targets in between. And that's all you really need, is to have an understanding of where price what price might be drawn to. Right? That's all. We know it likes the upper and lower ranges. We know the POC speaks for itself because it's an average of everything. And we understand when we're trading on the north side of the T-line and the 5 EMA that we're bullish. Oh, lo and behold, where would we could have taken our trade off? Right at the upper value range, right? This is pretty simple stuff. So before you know it, you have a methodology and a system. I'm going to change gears a little bit here, and I want to go to United Healthcare. Now, the reason I'm showing you this, and most of you have known me for a very long time, and you know that I don't just make stuff up just to tick you off or shock you. It might seem shocking, but it's not meant to shock you. And a while back, I think it was in one of these two candles here, somebody asked me where I thought this thing was going. And I had a number, right? It was like 260, I'll show you. Or let me find it rather. So I can say exactly what it was. It was, one moment, 269. Let's show this tab here. Weekly United Health, same chart you were looking at. My number was 269. A few weeks later, price hit it. Now, when you give a target, you don't give a target number with the anticipation that it stays there forever, right? It's a target for you to have an entry or exit at. So there's the target, which was hit. Now, I was asked again, where I thought this was going. And I have a, now that I hit that target, I have a different number. And I'm going to tell you why I have a different number. So here's the candle on the weekly chart that hits the 268 level. Now, what's happening on the weekly chart, guys? Price is going where? Sideways. What do we know about that? Because we've seen this so many times. Is that bullish or bearish? Bearish. When you have a dump and you don't get a snapback and you just go sideways, that's bearish. What else is bearish about this? Wick the T line. You notice that you couldn't even close above the 5 EMA, and then you wick the T line and you ran away like a scared little girl. Now, what do we have? We have a failed breakout. Again, this could be a 5-minute chart. I don't care. You have a failed breakout. And what happens when you have a failed breakout? You come back and you take out what? The previous wave's low. Now that we've done that, what does this thing really want? Because we know that when you break one level, you're looking for something else. Well, what else is it looking for? So what do we look for? Why did I choose this level? I chose this level at 268 because of this bench here, these tops of past price that cut through the tops and bottoms of these candles, this candle, and a little bit through here. That's where it came from. It's not rocket science. It's just finding a level of past price. You broke the 20, you found the 50. You broke the 50, you found the 200. You attempted to break out of the 50, and you actually wicked the 20 here. And what happened? You failed. And how many times did you get love from the 200? Is it the first time? No. So what happened? Higher probability of it failing, and it did. This is just nonsensical. Doesn't really matter. Because now, right, you have great opportunity to short up here. I missed the initial one. But look what price is doing. It's trading on the south side of the T line. It can't even close above it. Wicks the T line, runs away, takes out the previous wave's low. So we've broken one level, broke the 20, the 50, the 200, now the 500-day moving average on a weekly chart. What's it looking for? It's looking for the next level down, and the next level down is at $200. Bottom of these candles and this bench through here to the left. And I stick to this until the chart tells me that I'm wrong, right? That it invalidates the thesis or invalidates the trade. Now, this is also another example of, oh shit, I missed the initial move. I'm not even going to bother. Well, you don't even know what's after this candle. You've already convinced yourself that you're going to get another green one. How do you know that? You don't. You just know that it's in a confirmed downtrend. So you would feel comfortable taking that trade. I feel comfortable taking the trade down in here. Why? Because I'm still trading on the south side of those levels and the divergence is still there, so I take the trade. And I stay in the trade until the chart tells me that it's invalidated. And I still believe that this is what it's going to be pulled and drawn to. And by the way, this is roughly, I want to say 40 years, 1,000 MA on a weekly chart is roughly 40 years of price history that it reflects. That's what it's drawn to. So, until the chart tells me otherwise, I'm sticking to my theory, and the target is still $200. Right? I'm not afraid of making bold predictions. There's always a rationale, and the rationales are always really simple. Break one level, find the next. Trade on the south side of the T-line in the 5 EMA, you're in a downtrend, and that divergence is still there, you're still in the damn thing. It's not that hard. You don't have to go to MIT to figure that out. Nor do you have to work at Goldman or a bank or anywhere else. Read price on a chart, you're just going to be fine. You're just going to be fine. You have nothing to worry about. And in fact, just to kind of further that, where else have we had to make? We made bold predictions. Oil, right? We're going to talk about this again. Way back here at 95 bucks, I'm telling people that if this continues to break, or if what was going to happen occurred, that you would see 70 before 100. Bold prediction at 95 bucks? Yeah. Did you hit $70 before you hit 100? Huh. How about that? By the way, where did you find support? 1,000-day moving average on a daily chart. Is it relevant? I think so. After the big crash, what did it pause on for a couple weeks before it took off? There you go. Support, 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 support. Fail. The chart was telling me, and I don't have everything on the chart right now, but the chart was telling me that this thing was going to break down. And if it broke down and continued to break certain levels, that it ultimately was going to find a level of past price that is reflective of a bench that it can sit on. These two candles, when you condense the chart, stuck out to me like bright lights at night. All around the 500 and 1,000-day moving average. And again, you can see the resistance here. Previously, this was the target. This bench, those bottoms, lined it up $61.66. 95 bucks. Would you take that bet? If you're at $95, I don't care if it's Bitcoin. If Bitcoin was $95 and someone made you a bet that it would be 60 or 70 before it would be 100, you would lose that bet and you would think that would have no probability of happening ever. And that's an example of expect the things that you don't expect. If you're going to do this, expect the things you don't expect. And you have to check your bias and your ego at the door. Thank you, David Nikoski, for the reminder of the ego and checking at the door today. Because that's what everybody has to do, especially in a market like this. So if you check your ego at the door and you can just make an objective, rational decision or create a thesis that you can support, then fine, feel good about it. Because the chart doesn't lie. It's a real-time representation of what money is doing, not what people are saying. It's what money is doing. And right now, it's still bearish-ish, right? Trying to catch a bid, but not quite there yet. There's still more work to do. But don't think the impossible can't happen, because it can. And when you think that it can't, it usually does, right? As you know. Do you guys have any symbols you want to look at today? Because I usually ask you guys, and I haven't done that yet. We haven't looked at B&B, which I do want to do.
Hey, FEG, everybody in FEG and Blunt House. Thank you for hosting this. I just had a question on Quant, Quant.
Thank you for that. Thank you.
Yes, sir. No problem. Thank you.
Where is it? Here we go. I think this is it. Is that it? Quantos? No, I don't think that is. It's Quant, right?
Yes, correct.
All right. This is one of the other players in the ISO compliant category. So this chart is actually quite clean, right? Like you can see how it respects the value ranges. and you get super, like I actually really like these kind of moves. I like trading moves like this, the ones that are clean and don't have a lot of volatility mixed in, but nevertheless, this is a nice chart. Right? Obviously, you want to hold this level, but the breakout, you're going to want to take this previous wave's high, challenge the upper value range, so that you can take a run at this one. Now, you might be in a little bit of, have a nice move up here, a little bit of a retrace, a move up and a retrace and a move up again. It could unfold like that, but I actually like this chart. It's not a cheap asset though, per se, but neither's Bitcoin, right? So, but I do like the chart. So daily look like.
Another one, IOTA.
Yep. Okay, let's look at a weekly here and try and take out some of this noise. Now, I don't know the background on IOTA. It's obviously pulled back and has found a base. What's interesting about this level of consolidation, it's very tight between 31 cents and 15 cents, 16 cents, somewhere in there. So it's got a bit of a tight range. And, based on some of the charts we looked at earlier, where suddenly they just kind of unleash themselves on the world, that would be the hope for this as well. It's done it before. It can do it again. What I find interesting is it hasn't capitalized like XRP has, or XTC and XLM. And I don't know why that would be. It's a chart that's based out, and how long it will do this, I don't know. Does anyone know why this has kind of done this?
No idea, but definitely gonna look into it now that you mentioned that, because it is one of those ISO compliant as well. So kind of interesting that it's not having that type of trajectory all the other ones are.
Yeah, I think Corium is another. Is that right? Does that make sense? Corium? This has gone nowhere. Gone nowhere. One day will it? Don't know. Not a ton of volume. But it's just a chart, right? We don't know what comes after the current candle. If this thing wants to take off, what's it going to do? It's going to want to hit this high, hit the lower value range, and take out that high. Would be great to get into the gap to push higher, because we know that would be like the path of least resistance. BNB has been just cooking of late. The 200. A great example of a three candle pullback, which is, 3 or 4 candles is quite common, right? What didn't happen? Short-term 5 EMA didn't break down through the T line. You just basically had, 3 red candles in what looks like is a continuation to the upside. The divergence between the 5 and the 8 is still there. It's telling you that the trend is still intact, even though you had those 3 reasonable sized red candles. And what do you think this is going to want to do? It's going to want to take out this high. Right? If we go to a weekly, we're going to realize that we are in price exploration zone. So, you know, every day when you find yourself making new highs, you have to say, okay, how long is this going to last? Right? That's what was going on over here. Right? Continuing to make all these new highs, and then all of a sudden you pull back. Literally wicked the 50-day moving average, wicked it again here, and then this time you obviously fail it. Took a few weeks, maybe a month and a half or so, to break it to the upside, and then new highs again. And this is just a process of rinse and repeat, rinse and repeat. Just understand that not all the time will the rinse and repeat process be, you know, rinse, repeat, and move higher again. There will come a time where you rinse and you don't repeat. You break support, and then you start, you know, checking off levels to the downside. Right? It's just simply, you know, invert your chart, right? There's BNB weekly inverted. Right? If that was a weekly chart that you owned, you'd be concerned about it. Right? But unfortunately for you, that's the one you own. These charts can flip on you at a moment's notice. An absolute moment's notice. Now, let's take a look at FEG. It's the weekly. This is just a weekly chart. This is the MEXC chart, is the one I have up, of FEG, right? So this is FEG token. Does it remind you of some of those other, of XRP and Algorand and ADA and, you know, all of that grinding sideways stuff? It's identical, right? It's identical. It doesn't matter what the asset is. It's the process of this accumulation phase. And as that happens, you're noticing all of these averages start to come together. Usually when the 20, the 50, and the 200 twist, it doesn't take much more. Like, you don't have to wait for the 1,000-day to catch up, is what I'm saying. Like, it would be nice to see this breakout. And, you know, when you start seeing these things, you know, like it was XRP or like this, that breakout, well, when you start checking levels to the upside now, they seem monumental, right? To go from where we are now to way up here would be a huge deal, right? Huge deal. And there's a lot of past price here, guys. Like, there's a lot of past price at this level. Like, I know it failed the 200 here, but there's a lot of past price here. This will eventually become a target on the way up, without a doubt.
That's sexy.
Yeah. Like, and you can see the structural side to it. I'm just going to move it just a bit. But you can see in here, right? This is really what you want to get through. Break these bottoms, start working up into this area, with eventually taking out this top. If you can take out this top, that'd be super exciting. Like, super exciting. No, it's a doable thing. It just takes patience, and you just don't know how long the process like this takes. But the good thing is we've been able to show you what happens when it does break out. No, you'll feel like a genius when it when it does, right? So
yeah, and I think that's also because if you look at it, that level that you were talking about,
yep,
back on FEG, it's also a big psychological level because you know we all know what that past level was. So to get back to that level right there, I think that'll just, you know, getting back to that psychological level and people knowing about it, I think that will also set off a crazy ass chain reaction.
Yeah. Well, I think that's when having the staying power to kind of go through everything that it's gone through over the last few years actually will come back and be a positive thing. This is the stock that scares some people, including me, because it makes up so much of the market. Like, everybody is in this thing, and typically not in a little way. And you can see, but we're just technicians, right? We're just chartists. We're just drawing crayon lines. Okay. And you get a clean buy signal on Nvidia way back in April, and it's been nowhere but up. Even here we got 3 red soldiers. Did it break trend? No. Just keeps going up and up and up and up and up. And on the weekly, when you start to think, okay, if this was to fade a little bit, let's just make an assumption, which I don't like to do, but let's just say that this is our bottom and that's our top. And we're looking for 618. Well, 618 brings us right back to 123 on the weekly anyways, which would still be the same on the dailies. Doesn't really change anything. It's still the low and the high. Now, interestingly enough, that 618 level is below both the 20 and the 50-day moving average, which would suggest a break of that level. And there's the 100. So this is going to be interesting, because my fear is, like a lot of people, that when Nvidia fades, it's going to take so much of the market with it. So there's some, for this market, the stock market, to pull back, it doesn't require anyone to short it or anything like that. It just means you stop buying, right? Because this is about money in and money out. This is, look at all this. Like, all the averages that I use, because I trade on fractals, they're all here in this case. All twisting together, and then you have the breakout like we talked. But what happens? Do you see how it just fans out all these ranges? Like, the more parabolic we go, the more it fans out the ranges. That makes the pullbacks feel that much more painful. Like 133 is the 50-day on the weekly. Do you think anybody at 180 wants to hear that 133 is a potential number? They don't even talk about it anymore. They just keep buying it and buying it and buying it and buying it, so they don't have to, I guess. But at some point in time, price will come back and start to check these levels. There's the daily. We know that when we're trading above the 20, the 50, and the 200, that we can expect at some point. We haven't even tagged this thing yet, to be honest. Right? So you haven't even got a continuation directly off the 20-day yet. So you haven't had a significant pullback to even do that. And that's not reasonable. And that's what freaks people out a little bit, is that it's just not reasonable. Just like this didn't seem reasonable on the way down, but may not seem reasonable, but it's very doable. And then this again is United Health. Charts don't lie. Charts don't care about your bias. They don't care about your thesis. They don't care about how much money you have or don't have. They don't care if it's your last $5 or your last 5 million. The market does not care. It does not know you. It does not think about you. It will not send you a Christmas card. Does not care about you. You're a non-entity. There is no room for emotions or any of that stuff when it comes to what you see on your chart. Now, do we have different ways of approaching what we do? Sure. There are going to be people that will look at financials and evaluate based on the fundamentals of a stock. I do not do that. That's not how I do it. I'm a technician. I make my decisions based on technicals. I make my decisions based on the language of the market. If you believe that math is a language, what you should, because it is, then you have to understand that this is a derivative of mathematics and thus a language unto itself. And it's here for you to learn. Right? How did I meet a lot of the people in FEG Token Chat going back 5 years ago? Sitting in their Telegram group, listening to everything I could learn about crypto, not saying a word until people started talking about $100,000 Bitcoin when it was 30 something or 50, 60 something. And I couldn't stand it anymore. And I said, I'm sorry, this thing's about to roll over and you're going to go to 30,000. And I was not a liked person, I don't think, at the time. And then a short while after that, guess where it was? 30,000. And I was like, here was that guy that said it was going to 30. Where's he? I want to hear that story again. And then you'd show that over and over and over and over again on any time frame. And guess what? You have people believing you because it's a language. And when you understand the language, you can understand where things may want to go or will be drawn to. I'm sorry, people that bought UNH at $620, that you didn't have any understanding of how to read price on a chart. That's not on me, that's on you. And I'm sure there were some institutions that bought it up there as well, and that's a whole other conversation I'd like to have over beer. This is why I don't let anyone else touch my stuff. Because no one's going to look after me better than me. No one's going to tell me to buy this piece of crap at $500 or whatever the hell it was. This is a dog, or at least it is today. It is a fat, hairy, flea-ridden dog that doesn't have a lot of hope right now. Sorry. Could be IBM, doesn't really matter. Exxon, Apple. Right now it's a dog. It's a falling knife. And it's actually the literal example of people telling you to buy the dip. Buy the dip. You're never going to see prices this low again. Buy the dip, buy the dip, buy the dip. I'm the guy telling you to buy the dip, not a dip. Wait till it's done bleeding out. Oh, where's someone telling you, oh, buy when there's blood in the streets. Do you know when that is? Do you have any clue? Do you really? Look me in the eye and tell me you know. Because I had people telling me it was here, then here, then here, then here, then here, and then over here. If you don't know the language of the market, you are running risk that you can't control. It's not hard to learn, and the chart doesn't lie. The only thing that's going to get in the way is you. It's as simple or as complicated as that. All of this stuff is doable. I didn't work at Goldman. I didn't go to MIT. But I can read price on a chart like a mother effer. And so can you. All it takes is time, patience, repetition, blocking out the noise, and opening your eyes. That's it. It's not that hard. Nothing special to it. The chart doesn't lie. Remax. Weekly. I just wish somebody would take this thing out behind the barn and shoot it. Because that's what looks like needs to happen. But somebody's telling you, buy the dip, buy the dip, buy the dip. Is there a trade in here? Sure. Short. But do you want to start buying this dip to build a book of Remax stock like this? There's people doing this stuff. Come on. If you don't understand where price is on the chart in any context whatsoever, then you shouldn't be trading. Let someone else do it for you. Hire a professional, whatever you got to do to manage your money. But if you don't know how to read price on a chart, you shouldn't be trading. or investing for that matter. Because all you're going to do is make mistakes over and over and over again. Not because you want to, but just because you're unable to help yourself because you have no context. Right? This is Dow. Does this look like a toppy chart? Yeah, it does. Does it look like it's eager to make new highs? Not today, but it's still bullish, right? Look at the divergence there. It's still there. But are we trading at levels that are a little overbought? Yep. So at some point, we're just going to come back. At the very least, we're going to tag the next level. If we bounce, then we're having the conversation about taking out these highs. If it fails, we're just looking to the next level down. And if you're trading, you have to be indifferent to price. Price up and price down is merely an opportunity. That's all that it is. It's just opportunity. Price moving up is opportunity. Price moving down is opportunity. The problem that a lot of people have in this space is that there isn't, like in the crypto space, not a lot of people are familiar with shorting. Right? And once you're familiar with and comfortable with shorting, you're going to realize that you are not making money 50% of the time. Right? In order to be a complete trader, you have to be comfortable selling long and short. That's how you monetize the market up and down. So when when you hear people say, "Oh, you can make money in all markets," you can, you really can, but you just need to understand what's going on the chart at any given time. So a lot of people in the crypto space, when the market goes south, they're still trying to make long trades. Like you're literally pushing water uphill. If price wants to fall, then just go with it. Take a short, right? That's what we're doing here. Take your profits and then buy something that you love if that's what you want to do. But it's make money up and make money down. This is Apple, right? We've been talking about Apple for a while on how we thought, okay, it would have to come back to the 20, which it did on the weekly, and it's also done it on the daily. We talked about this a few days ago. Roll over and it come back to the 20. Here it is. Right, here you get the 20, failing it. What's it looking for? Break one level, find the next. Will it be in today's candle? I don't know. Maybe, maybe not. Will it want to test this level and then reject and come back down? Maybe, right? But you know what the range is. It's easy to see, right? Break one level, find the next. In all likelihood, we're looking for the 100 or 50 MA down here. And this is where it gets tricky. So this is a failed breakout. We roll over and we're kind of working on taking this low out if we haven't already, but let's assume that we do. And you start looking for the next low. That's where it gets kind of sketchy. And I think Apple has earnings tonight too. So that's probably going to factor into this. And when we look at the weekly, there's the 20 down here at 204. And a lot of people I know have numbers between 169 and 183, which is the 200 weekly is not an inappropriate place for price to go, right? It's just not. So don't be alarmed when these things happen. And you shouldn't be, because you'll have a better understanding of where things are actually going, as opposed to looking at the chart and just seeing a complete and total capitulation without any understanding of what price might be looking for to calm down. For those of you that like Tesla or trade Tesla, here's the weekly. And it's a critical time. Why? Because you're sitting on the 50 MA. Right? The reason that my 50 is like an ice blue color is because the person that trained me basically considered it like ice. So when you're getting support from the 50 as ice, that's solid, right? And you get support and you stay above it and potentially bounce. But when you break the 50, now you're trying to break through the ice, and that's often a difficult challenge. And here we are right now on the weekly chart. Now, again, earnings are tonight, so this could change yet in a couple hours. But right now, you're getting a sell signal on the weekly chart for Apple. And if it breaks the 50, it'll look for the 20. And if it breaks the 20, it's going to look for down here, which is the 200. And you got the point of control. Right? This is where money's comfortable being, at the point of control. So you can see how there's downward pressure. Any other symbols you want to look at today, guys, or any other questions that we can deal with, or any other stories of trading? Because we do talk about that too. What happened to us this week that either made us successful or kicked us in the teeth a little bit? What could we have done differently? And sometimes it's just acknowledging it out loud, which can be helpful. This is what they call XRT, and XRT is the ETF for the retail sector. So it's kind of tapped into the consumer, in a sense. It's going to tell you if this consumer stops spending money, it'll show up in the retail, and it'll show up in XRT. So we had a nice clean run. Again, we're kind of trapped by the value range. Right? It's kind of boxed in price for us quite nicely. If we close below the T line and get another red candle to draw down the 5 EMA and trigger a sell signal, where's price going? It's going to look for the 50, probably the POC, which is that thin red line, and then it runs risking getting into the gap and rolling over. Could be, again, it could be a Bitcoin chart. It does not matter. Microsoft. What do you make of this? This is actually a challenge to kind of make sense of, right? So you've got, obviously there was some earnings, I think last night, and that's the daily response, right? A big gap up with obviously a large retracement, but you have not retraced all the way back to the 5 EMA or the T line. So we know that's got to happen. Right? Because you just can't continue to do that every day. If we flip the weekly on, it doesn't look as serious, does it? Is it a toppy weekly candle? Yeah, sure. Are we maybe due for price to pull back to the 5 EMA so that it can be a little smoother like this? Yes, that would make sense. Time and price can come together, and that will happen. When you have a big exuberant candle like this, however, you just have to be aware that, hey, you know what? Sometimes the initial response in this case is green, but a week or two later, the red candles start to show up and they retrace a big part of this move. And if we were to run fibs on this again, because fibs for fractals and filters is what we're trading off of, they're the fibs, we're 618. Just below the 50 at 425. So if this high was to stick, then this, that would be a fair range. Will it feel like the sky's falling? Probably. But price is just coming back to a technical level. Because we pushed price up so high, so fast, that's what created those ranges, so we can't blame ourselves for that on the way down. Right? And that's why we use fibs, and they're reliable. And when you line them up with other things that you can help validate levels with, you'll find they are very, very effective. I want to look at SPY quickly. So this is weekly SPY, which is basically the ETF of the S&P. Right? Same thing. Look how, it's like every day is, potential to make a new high. You're trading well above the 20, the 50. You're trading above everything. You have made some tests already. You can see by the volume profile on the right that you're trading in thin volume comparatively to what you see here in blue, which kind of frames in the value ranges in the POC, which means that this light trading, when tested on the downside, might not have a lot of substance to it to hold price up. Is it still a bullish chart? Absolutely, right? The divergence is still there that we talk about. It's still bullish, but it won't be bullish forever. And you guys have to be aware of, and maybe that's why I spend as much time on it as I do, is because when these things happen, it'll be less shocking. And it's one thing to have a discussion like this and look at it on a chart, but when it's your money, you'll understand why we're doing this, because it becomes real important real fast. And I think we have a little bit of a concern here on some of the markets as we're starting to fade a little bit. So this is YM, which is the E-mini, the futures contract for the Dow. What are we doing? Right? We had continuations off the 20 3 times. This time we fell. And we're getting a sell signal. We back it up to the 4-hour. When did we get our very first sell signal? Way back here on Monday. So think about that for a sec. This is Monday. Right? We got our sell signal on the 4-hour on Monday. Tuesday, Wednesday, Thursday. Now, would you rather be in the driver's seat on this candle or in your short here on this one? You have a choice. You get to pick one. I'm pretty sure you're going to pick this one. This is why we use the script. Right? So if I'm looking for an entry on a daily, I'm always backing it up to the 4-hour to see if I can find a reliable. And when I say reliable, I mean there's enough substance in that time frame to make that entry worthwhile considering for the daily. It's less choppy. So that was your entry candle on the 4-hour. That would be the candle that, people in my group would want to entertain off the 4-hour. Now, if this candle, and so we talked about this earlier, let's say today or tomorrow, this candle starts to retrace higher. If you were entered on this one, or even somewhere on this one, to the left, you'd be forced to have to make a decision that you probably wouldn't want to make. But if you're in on this one, you have that luxury. You've already have profits locked in. You've adjusted your stops. You're in the driver's seat. You can't lose on this trade now, nor are you going to give away too much because you're already locked in. That's why we do this. That's why the script is here, to give us a safe, profitable entry on any time frame we're working off. Right? But if you're entering or if you're looking at a daily chart, you're going to get the early heads up off the 4-hour. And this was a great example of that. Now you're in the driver's seat. You're going to take out failed breakout that does what? It's going to take out the previous wave's low. Now, I know a lot of you like patterns, right? Everybody likes patterns. Double tops, double bottoms, inverted head and shoulders, the list goes on. So this is kind of a double toppy setup. Not perfect. It's not textbook, but it's pretty good. Is this considered a double top yet? No. Is it 2 equal points in price? Yeah. Can you expect a pullback at a second top? That's reasonable. But technically what has to happen is it needs to break this. Basically needs to break this center channel to be a technical double top. So if this is a failed breakout and it does fail and it does take out the previous wave's low, that means it confirms the double top in the middle of a gap with the 50-day moving average below it. Make sense? So what did we just figure out? We just basically lined up basically the handful of rules that we use to help validate what this thing might do. We're never going to be right 100% of the time, but you can increase the probability of being correct by just understanding what those simple things are, right? We got a great entry off our 4 hour back here, up in here, which is awesome. So we're in the driver's seat. What's the problem, right? Why are these things hard? They're not. This was a confirmed signal. In other words, you could have cheated and got in earlier. Look at the flat, points and flats, points and flats. Points and flats indicate changes in directions. Point, right? This solid flat here that goes red, that's the fade. The flat senses the change in direction, that's what we're seeing, and then you could have shorted even up there even sooner. What's price drawn to on this chart? It's going to be the 200 and the lower value range. We don't know if it's going to hold, but this is now our target on that time frame. So we're in kind of slippery waters here. When you start breaking down, you have to start looking at this stuff to the right. More money comes in, this will all change. But as long as the sellers are around, this is what happens. Any other questions, guys? Or any symbols you want to look at, because we can do that still too. Here's another nice, clean, technical chart. This is Monero, XMR. We talked about the consolidation and then the breakouts, right? Again, nothing goes straight up, right? This is the ebb and flow of price movement. Where did this thing get kind of range bound? At the upper value range. Right. Broke the 20, broke the 50, just broke the 100 MA after getting a little bit of support from it, so that's meaningful. What do you think it's looking for? Well, here's a bench of past price to the left that we've drawn our line over top of, which is basically sitting on this little mini shelf between these two gaps with the 200 MA beneath that. Am I confident saying that this is probably, this range, this area would be a draw for price? Yeah, it's reasonable to think that. That's the weekly. It's not the first time we will have seen the 20. So there's that increased possibility that we could fail. And if we fail it, well, there's how we get to that level that we saw on the daily, and then you can see where the 50-day is on the weekly at 229, which lines right up with this area in here. So if we break this level, we find the next. If we hold it, well, then we start doing what? Looking out for those previous waves high, and this whole process just repeats over again. And again, it doesn't matter the asset that we look at. It could be anything. NASDAQ 100, weekly chart. Kind of hate that candle at the top of a bull run, don't you? That's not a nice look. But even still, is it bullish? Yes. If it was to pull back, well, there's your 5 EMA, there's your T line. You break that, well, you're back down here at 20,800-ish. Right? That's just the anatomy of the breakdown. It doesn't mean the sky's falling. It doesn't mean what you own is going to zero or anything like that. It's just the anatomy of the breakdown or the breakout. Simple as that. Any time frame, any asset, it doesn't matter. You will all see price react the same way. Another crypto project.
Hey there, Bill.
Hey, how you doing?
Hey, sorry. I'll let you continue, but I just I kind of been in and out. I have no problem rewatching it. If you did go over it, I was just gonna double check to see if you would take a look at Soul. Or I'm not sure if you talked about it.
No, we haven't actually. So let's do that.
So I was looking at yesterday, early this morning, the 4 hour. I'm trying to expand like longer time frames. You know what I mean? Just being patient with it. Most of it is look the same. As far as the moving averages, they're all winding up together. It seems like the volatile move to be coming. In either direction. It's usually what happens when those moving averages do so. But I noticed you guys bring up Sol a lot, so I just when you get a second, please.
Yeah, for sure. So we've got Solana up right now, and we've got the 4-hour chart up. Volume profile to the right. So you can see, the upper value range of the volume profile is kind of where we found our resistance. But let's just move the chart over for a moment, because this is what you're going to be looking at, right? That's what you're looking at on the 4-hour. So you could have in the middle of your screen there, just to the right of where price kind of met the 50 and got some support. Following that, you get a buy signal. It was actually a red candle that created that on that buy signal. And, price just starts marching up. It does go sideways, but you don't see a sell signal, which is telling you that you're still in an uptrend. And yeah, it was really tight as it went sideways there, but it starts to hit the 20, and guess what? You get a continuation, and price just continues to move on. When you see on a chart like this, because again, this is what you'd be looking at, you would see the upper value range there that created those two equal tops. Of course, one green candle, one red candle. That is an early cue that you might want to consider exiting the long, right? Or taking a short, depending on how you're trading. But there's your confirmation candle that you've kind of broken trend. Right there. And this candle actually breaks the 20. Yeah.
Correct?
Yeah.
Gotcha.
Right. And then from here, what happens? Price is just trading on the south side of those levels. Now you're at the 50. So we broke one level, we found the next.
Yeah.
Okay. Now.
And the 50 brings us around to 79, 180, I think.
Yeah, it was
that's
like 180.
kind of where I was hoping.
5-ish or something is where it was
at
this point. But you'll see on this red candle that you see here on the right of your screen that all of this divergence is still intact. So even these three candles, a lot of people would have washed their trade at the 50 and gone long. I know that. I guarantee it.
Yeah, I would have done so myself just because of that wick, that crazy wick down. But I'm starting to notice progress in myself just watching your streams and talking with you. That once it doesn't break, just take your time. My biggest thing was rush. Oh, I got to get it before it takes off or shorts, or
Yeah, and that's where that's basically trying to front run something, and we find ourselves doing that if we're looking at too many time frames as well. But on this 4-hour, again, the 4-hour is going to give you a nice early entry on a daily typically. I don't think this would have been any different. But again, just follow the chart, right? You don't have to front run it. We just follow. You've got a very clean sell signal there. You take it. You broke the 20. You found the 50. This is the failed breakout, right? So the move down. See these wicks that can't break the T line? Take out the previous wave's low. That's what we did. And in fact, we actually kind of came all the way back here to this bench that went nowhere and we thought was a waste of time. Well, look what price came back to, right? What did it do on its way down? It sat on a bench of past price where buyers and sellers have shaken hands in the past. Big move up. Oh my gosh, I'm really exhausted. I gotta take a break. Where do I sit down? On a bench. you get another buy signal, another nice little run, and you break down again. What's interesting on the daily is, let's see, where is it here? I think it was the daily. Maybe it wasn't. Here it is on the 4 hour. So here you have the 20. See this wick, this rejection here?
The rejection of the 20 there?
Yeah, this candle here.
Yeah.
So move down. You go sideways, but the trend doesn't break. And then this candle, like this is a 4 hour candle. So at one time, this candle probably looked maybe even green. But as soon as it hit the 20 and started to pull back, right? That's a sign of weakness. And you can see that this downtrend never did break. And boom, there you go again. And now this is a failed breakout, right? You know, the arch up. There's your top at the 20, failed breakout. You come down and you take out the previous wave's low. That's what we're doing. So I would expect price to drop down to 175, 75-ish, right? Is there divergence between the T-line and the 5 EMA still? Yes. You trading below those levels? Yes. So you're still bearish.
And one more time, Blunt, the just said, is there divergence between the 5 and the 8?
There is to the downside, yeah.
Okay, and that just means that it's separating, right?
That just means that there's momentum down, right? So when, so like you can see here on the screen, this divergence that sticks between the two is just telling you that it's just momentum down, right?
I follow.
You know, it looks like, yeah, there was an attempt to move higher that was rejected. There wasn't enough momentum for the 5 EMA to break through the T-line to the upside. It actually just peaked right out, failed, and now you see the divergence again, right?
Awesome, understood.
Yep. And if you were trying to get a look into that 4 hour candle, you could just simply, open it up and go to a shorter time frame to see what might be going on. And okay, this is a rejection of the 50 and the 20, so that means something to me. Don't want to fail the 50. And then you might want to take another, again, 175 range, right? Those bottoms.
Yeah, that doesn't look great. Fail at both the 20 and the 50. That's
not if you're long, right? But if you're indifferent to price, you're just, another great example.
That.
There's your sell.
I'm sorry for always saying that, but you're right. I got to switch my mindset to that just to be prepared for both sides.
Yeah.
Yes.
Yeah. And if you're freaked out to sell short, just use a small amount of leverage just to get comfortable.
Gotcha.
And for those of you that want to know how to invert your chart, is all you have to do is just hit Alt and I, and it will invert your chart. And sometimes that helps you because when you're looking at a chart that you want to short, but you invert it, a lot of people are just more comfortable when they see it like that because it's so strange to try and analyze a chart to the short side. So you can easily invert it. Just Alt I.
I never recognized that. Does that also adjust the indicators, the moving averages?
It just flips everything. That's all.
Okay, cool. I'll try that out. Thank you for that.
That's all it does. But for people that are uncomfortable selling short or it's new, it's often just helps them to see the chart in its, in a long kind of context. That's all. All right, so anyways, guys, if, this has been a pleasure today, and there's obviously a lot going on in these markets, and I have a feeling the weekend won't be a quiet one. So we're going to get back together on Tuesday of next week to see where we are. But, here we are. This is what I want you to understand. Bitcoin daily. Does it feel like forever? Yes, right? It does. And this is what time feels like. And time is an anomaly in trading because you encounter it on time frames, both short and long. And when you're in a trade and you're active, it can feel like time is going too fast, or in fact, it feels like it's standing still, right? So when price goes sideways, it often feels like it's standing still, but you're picking up little sell signals here, right? That's the daily. You're going to the 4 hour. And what are we doing on the 4 hour chart? Well, we're failing the 20, the 50, the 100-day moving average, the T line, and the 5 EMA. Oh, and the point of control on Bitcoin. So we know that when we fail a bunch of major moving averages, it's typically not a good thing. And it looks like the price pressure might be down. There's our range. We've had it there for a while. We knew this was going to act as a support level at some point in time, and maybe it will get tested here. Right? Just level by level. Break one level, find the next. Unfortunately, on the 4 hour, because we've broken everything, there's not a lot of place to sit until 114, 115. So, but this is how we do it. So until next time, trade safe. Make sure you mitigate your risk. Don't trade with giant position sizes. It's not necessary. Try trading over longer time frames with a little less lev so that you don't get all manic when things start going sideways and you've got room to recover and to deal with what's going on the chart. Don't push it, and just kind of let the market come to you. Don't rush the trade. Don't force the trade. Try and find the setup that is you're comfortable with and works. Right? So if you guys aren't on BYDFi, please check it out. I think it's one of the cleanest interfaces in crypto. The UI is really, really nice to trade. So I really enjoy trading there, and it's slick and smooth as well. So take care, everyone. If you have any questions about setting up your BYDFi account or your charts on BYDFi, just let me know and I'll help you out. And I will see you on Tuesday of next week. Take care, everyone, and have a great weekend. Bye for now.